half joking, but Peter, it's been a long time. I mean, they telegraph everything. The markets price this stuff in well in advance. We talk about the downsides to that, but that's the world we're living in.
Well, Powell focuses a lot also on signaling, as an institution they do as well. So Powell is basically laying out the blueprint for the September cut, which he'll do on Wednesday. But he's of the attitude, well, if I cut on Wednesday, even though I have every reason to, but if I do it and the market doesn't expect it, well, then maybe I'm implying that I'm worried about something.
Exactly. And we saw that with Dudley last week when he wrote that Bloomberg piece. And everyone said, well, what does Dudley know that we don't? Is there any way, Tom Lee, that Bill Dudley knows something we don't at this point, given? I just find that implausible.
I mean, I don't think any FOMC official or former Fed knows anything the market doesn't. I think it's just their judgments about the state of the economy. I mean, I think there is evidence the economy is pretty soft, whether you're looking at housing sales or autos or durable goods. But yeah, I kind of agree with Steve and Peter that a cut for this meeting would probably not be viewed positively.
Yeah, Peter, expound on that a little bit.
Well, I think things are lining up for that cut. And
in September.
In September. But I can argue that things have lined up for Wednesday. Mm-hmm. But the Fed likes to sort of game plan things out. They don't want to be caught stuck having to slash rates. They don't want to have to be caught spiking rates, which was their experience over the past 4 years. They want to be sort of in control of this conversation. But at the back of Powell's mind is, yes, I'm going to give you some rate cuts, but I may not give you the amount that you want because I'm still worried about inflation. Yes, inflation's in the 2 range. I'm very happy about that, speaking as of Powell. But my concern is that I lose control of this credibility that I've worked so hard to get back.
Absolutely. And we were talking on Friday a little bit in the weeds about whether potential GDP is actually higher than we realize with Mark Zandi. But will you Tom mentioned that he thinks that things are slowing down. Do you think things, Peter, are slowing down? Or it's hard to tell because the areas that are softest are the areas that are resetting post-pandemic. So even McDonald's, I cited this example today, but they have negative comps. So, it sounds like a disaster for the consumer, but Chipotle's up 11%. McDonald's just took the price of a 10-pack meal to $9.19. So I don't think their softness is telling us that the broader economy is soft so much as that it's resetting.
I'm seeing a lot of softness. And one thing between Chipotle and McDonald's, and I've seen surveys on this, if I go to Chipotle for $10, I can get 2 meals. Mm-hmm. If I go to McDonald's with $10, I'm getting 1 meal. So there's a reason why Chipotle is doing well. The consumer is still approaching both restaurants with the same sort of budget value type seeking mentality. And to me, the economy is softening. And I'm seeing that across the board. The only thing that's strong for the economy that I see is the higher income consumer, the baby boomer, and government spending. and spending on AI and all the CapEx associated with that. Most other parts of
consumers, baby boomers, anything associated with the government and AI.
I'm seeing weakness across the board elsewhere.